The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin, Jeong. As the pressure mounts to hit net zero targets, carbon capture, utilization, and storage, better known as CCUS, is gaining momentum across the globe. In theory, it's a game-changing solution that allows hard-to-abate sectors to decarbonize without overhauling their operations. But in practice, the path to widespread adoption, especially in Asia-Pacific, is anything but simple. What's working, what's not, and most importantly, where is the money going? What will it take to scale these projects beyond pilots and into profit-making ventures? And can Asia-Pacific turn its emissions challenge into an innovation and investment opportunity? Well, to find out more, joining me now is Sohini Chatterjee, who is the Vice President of Low Carbon Research at Rystad Energy. Hi, Sohini. Thank you so much for joining me here in the studio.
Thank you so much for having me here. I'm very excited.
I'm excited as well. So let's start off our conversation by, answering the big question. What exactly is CCUS and what's the science behind it and why is it important?
Thank you so much for the question. So CCUS mainly stands for carbon capture, utilization and storage. It's a pathway for emitters to reduce their CO2 and making sure it doesn't go into the atmosphere. What as business as usual it should have gone. The importance comes from the fact that we have a lot of countries that want to decarbonize, right? That want to reduce their emissions. And for a lot of this or bulk of this emissions that comes from the type of industries or the power facilities, etc., there is no other way you can go business as usual without stopping that CO2. So that's where the relevance comes. You cannot electrify it completely or you cannot even, stop the operations. So that's where it's very important.
Okay, so how does CCUS compare to, other decarbonization technologies like renewables or hydrogen in terms of effectiveness and scalability?
I wouldn't say it's an apple-to-apple comparison. Renewables is about producing the energy. Hydrogen is also a commodity. CCUS is a pathway. It's always the economics and the technology that determines whether a facility should do CCUS to reduce the carbon or electrify it completely, like install renewable capacity to, stop the emissions, right? Of course, in terms of maturity, it's comparatively less mature than renewables and hydrogen because they have been in the picture for quite long. But even in that case, CCUS is not fresh out of oven as well. We have projects operating for decades. But the data points to justify the technology on a large scale is comparatively lower. So I would say let's not call it an apple-to-apple comparison on what's better or what's not. All these three technologies exist in the market, but it's ultimately the economics and the technology that would determine what should a company do to reduce the carbon.
Makes sense. Well, then how is APAC faring when it comes to CCUS? Who are the leaders in the space for the region?
I would say from being absolutely nothing few years back to a situation right now, we have seen a very aggressive growth for CCUS in the last 1.5 to 2 years.
Okay.
I wouldn't say we are still there. There are still a lot of, aspects that needs to be addressed, especially on economics. But in terms of trying to get the regulations in place, seeing what partnerships could work, seeing how to make money out of this technology, we have come a long way in a very short span of time and with multiple projects announced across the region. In terms of leaders, many countries are on the same level right now because, as you know, it's not very mature. But I would say China in terms of largest amount of projects. So that's an exception. Let's keep it out of the picture. Then you have Japan, you have Malaysia, Indonesia, Australia, as well as Singapore in the region. That are some of the key countries that come into, the picture when we talk about CCUS.
Okay. So you mentioned the progress is there, but we're still not there yet. But what are then some factors slowing down the adoption of CCUS in the region?
Again, business case, money, that speaks. CCUS is an additional cost that needs to be paid if you want to incorporate it as a part of decarbonization, right? And unless there is a justification on how you compensate that amount, it's a big inhibitor, I would say. So many countries are working to make the regulations work. quantified and it's in the correct direction. Collaborations are there, but the main aspect that is missing dot is funding, how to make the economics justifiable in APAC space.
Okay, so the factor here is money. So where is the most of the investment in CCUS coming from today? Is it public funding, private capital, or, blended model?
I would say the elephant share is public funding, or in a way to say obligation to offset CO2, carbon tax, very high ETS or carbon pricing that exists in Europe that makes a very favorable market to do CCUS than rather to pay that high amount of tax, right? And then there are $1 billion of funding and tax credit support from the government. So that's the elephant share. We do see some private investments also coming up, especially in US or so, but it's a very small part of it, I would say. So the main market is still on the government that is driving this space majorly.
Okay, so what would you say are the most promising projects or upcoming developments to watch here in APAC?
I would say there are a lot of projects to watch out for, and they are again on the very same plane. But just to mention some, we have 3 hubs that are planned in Malaysia, which is the northern, southern, and the eastern hub, which are really also the hotspots that Japanese players, as a part of their cross-border options, are looking into very heavily as well. We have multiple projects in the western part of Australia, led by Woodside and so, which are also developing the hybrid model of CO2 storage, which are really a focus of many companies. And then you have recently BP's Tangguh that took the FID last year. That's very interesting project that's going to be a unique enhanced gas recovery one. So that's also quite interesting. China, we have a lot of projects which are really very similar and they are progressing quite on a similar rate. So I would say this would be some of the key highlights to watch out for in next few years.
All right. Well, you gave us some examples there, but are we seeing enough bankable CCUS projects in APAC to attract large-scale private investment?
I would say in terms of bankability, it's still not there.
Okay.
It's also because of how to make the money. The business models are not very clear. We can't expect a very high $1 billion investment from government. Our economics in our countries are very different to that of Europe, right? So it's not a same comparison that we are doing. And to expect such high investment from government in short term would be unrealistic. So then how to make it work is the major aspect. Of course, there are a lot of business models that are being navigated, and once they mature, that would make projects in CCUS more bankable. And second aspect is in terms of regulation also, we are there in the right path, but we haven't reached the target. There are a lot of gaps yet that needs to be addressed in many countries in the region to make the regulation more favorable for CCUS. So it's a combination of a gap in regulation and a business model that's kind of hindering it to be highly bankable, I would say.
Okay. Well, then how does CCUS fit into the region's broader net zero or decarbonization goals?
As I said, that we are talking about a region that is highly fossil dependent, right? And to make the region decarbonized and to make business as usual, to continue running those facilities, the power generation, etc., there is really no other option than you offset the carbon dioxide. Simply buying carbon credits 100% cannot make it viable. And there are so many cases where you cannot electrify the facility like I mentioned, or replace it with hydrogen or so on. So CCUS is going to be highly relevant given the type of emissions we have in this region, and the governments, they are trying to, make the decarbonization work, reach their targets that they have set across, their NDCs and INDC target. So that's how I would say that there cannot be an alternative for CCUS if you look into the longer term, if you really want to reach those targets. So that's where the relevance come, and we see so much of aggressive development. Everyone is trying to make it work. That's the main thing here.
So what role can international collaboration or private investment play in driving momentum?
I would say a very significant. In fact, we are seeing that as we speak today. A lot of international players who are really trying to make it big in CCUS, they are entering even in Southeast Asia or even in Australia, China, and so on as partners to expand their CCS business. And they don't bring in just the money, but they also bring in a lot of international experience, how to lower down the cost, which partnerships to target in order to make sure that it works in the correct direction, how to build up the business models, because they have the experience in their countries for making it work.
Okay.
So that is definitely a key, I would say, because we are talking about a technology which is not, it's proven, but not mature. So a lot of ifs and buts, questions still, loom the market, right? So having experience or partnering with companies who have real world or real project experience to help reduce the, uncertainties can help a lot. So it's a key, I would say, in this region.
So how do the returns on CCUS then compare with other climate-aligned investments? Is there a path to profitability without heavy subsidies?
Okay, right now the returns are very low. Again, how many years are we talking about CCUS? It has been in the picture for 3 decades plus. But really talking about it on such a global scale, 3 years, 4 years, that's the timeline. We are talking about a technology. With respect to that, we have come a long way. There are a lot of concepts like CCS as a service or, a CO2 utilization market where you can just sell the CO2 as a commodity to make valuable products like urea, methanol, etc. That can make money, but the returns, I would say, are still quite low. We don't expect a return even in 2-digit number in short term to be on realistic ground. But we really expect the demand to be comparatively higher, especially 4 to 5 years later, and then we can really enter a more 2-digit number as well.
All right. Well, overall then, Sohini, how will voluntary carbon markets and ESG investing trends shape the future of CCUS investment?
I would say a very interesting part here that I would like to highlight is the technology-based carbon dioxide removal carbon credit market, or we call it CDR market. That has a very interesting way to make CCUS, a very large part of CCUS projects like biogenic-based CCS or even direct air capture-based work. And this is a market we are seeing momentum for many companies, including Microsoft, who are investing millions of dollars to purchase these credits. And as we speak today, they are already, buying credits. And a big part of these credits come from CCUS projects.
All right. Okay.
If this market is able to be realized here, which we really see a high potential, that could be a game changer for establishing the economic case for CCUS and would reduce the dependency on, government support. So in short, my take is, yes, there is a market that's there, but here I just want to highlight that we should move in a direction of making business models or CCUS work as a business scheme or commodity. That would be the game changer. So making those business models mature would be key, and reducing dependency on government support will make this technology more long sustainable.
All right. Some great insights from you there. Thank you so much, Sohini, for joining me today.
Thank you so much.
That was Sohini Chatterjee, who is a Vice President of Low Carbon Research at Rystad Energy. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.